What's up, guys? It's April 16th, 2025. Had a pretty cool day in the markets. Change up from yesterday's range. Yeah, we broke out and had a gap down and continued. This gap down wasn't big, but it was a gap down. It showed momentum. And then the rest of the day was bearish right around the middle of the day. Want to give a quick shout out to everyone following me. Got a lot of new followers coming in. That's pretty fun. Uh, it's kind of crazy to think about because I don't know. It's just that's a lot of people. So I appreciate everyone. Thank you for your support. I drop these videos every day. And thank you to the members. You guys are great. I love answering your questions. And I definitely if you guys aren't members, just so you guys know, a couple of the guys are working on banking 100 trades. And then once they get 100 trades, I'm gonna do some sort of like in the Discord screen call, and we're gonna try if they're comfortable with it. And just go through their trades and teach them how to. So, for example, someone asked me, I don't know when I should be adding to my trades. And my answer to him was, well, do 100 trades A to B, and then let's go over your winners and see when you should be adding. Let's go over your losers. So, there's not really, the human's not making the decision. The stats are telling the human what to do. So, that's going to be fun. Whenever that happens, that's going to happen. So, that'll be the Discord. And yeah, let's get into it. Daily chart, 15-minute chart. Man, we're going sideways. Sell off. We had a breakout, leg one, pull back leg two, pull back leg three, bad leg four, sold off, and then rallied. Such a big bar, bulls had to take profits, and you can see a very deep pullback just above the 75%. One thing I want to say is I'm going to be throwing out percentages, so 30, 50, or 75, whatever numbers. I'm trying my best to eyeball them. We have time to actually measure them, but I do want to start training my eyes to just figure out like, okay, so I said 75, I said just above 75, that's closer to 50. I think it's important to train your eyes to, it's just important to train your eyes. Anyways, so that's that. Let's talk about the price action. So big pullback, a big rally, got an immediate pullback, no follow through. It actually did go one tick above. Pullback to around the 50% level. It rallied. Bulls did not make a new high. I'm talking about this bar here. Now we're selling off again with these three bars. This is the overnight session. This bar right here, it looks like starting out as a bull bar. Today ended as with a tail, so we're seeing some bullish price action in the overnight session. I'm messing around with the new, I don't know what I'm doing. I'm messing around with this new thing. I don't think I'm going to use it, but training you got a demonstration, but I like to use the pen tool instead. Anyways, I've been rambling. Gap down, bar one, bull bar. Bad for the bears, good for the bulls. Bar one, usually when we see a gap down in the first bar is the opposite bar. That's not good because that doesn't show us continuation. But if we stay true to leg one, leg two rules, this is one big bar. Leg one, pull back, leg two, pull back, leg three. Leg three is a higher low. Bad for the bears, good for the bulls. So bar one, good bull bar closing on its high. Looks like a continuation, and does with bar two. Bar two ends up having a tail, and it doesn't close as far past bar one's high. Actually closes underneath it. So now it's starting to become a pullback. Bar three, bear bar closing on slow. Bar four, bear bar closing on slow. If you're looking for a trade right off the rip, which I know a lot of us are, if you are looking for a trade right off the rip, first of all, have the overnight session up, and you could. Oh my gosh, I thought the neighbors were done construction. I just heard a drill. Okay, so see, if you're looking for a trade, use the overnight session, and we can see like one pullback. This 104 is bar two, 105 is bar three, and you can see that sell off. There's not one to one of the opening range either, so that kind of sucks. You might get stopped out unless you're able to scalp out. Okay, yeah. So breaking out of the opening range, bar four. Excuse me, bar five, bar six, follow through, and then immediately we have a pullback, bar seven. Whenever we have three bars in a row, the chances for a pullback go up, and every bar in that direction, the chances for a pullback keep going up and up and up. So that's something I like to tell myself when I start to get FOMO, because I see the market traveling far in one direction. I'm like, hey, I need three bars in a row. We're going to eventually get that pullback. It's going to come sooner the more we wait. So pullback, bar seven, bar 8, bull bar closing on its high. Bar 9, bear bar closing on its low. But now we're definitely in that third leg with the gap down being the first leg. Bar 10, not an inside bar, but it is a small bar with very small risk. And if this is the low, bulls don't have to risk a lot to find that swing. If you take this buy, it's a low probability trade. So if you took this trade 10 times, you could get stopped out 6 to 7 times. However, if you hold for the swing, you would make your money back on those 3 to 4 times the trade worked. That's the trade-off, right? Low probability, high reward. High probability, low reward. Big risk. This worked out. This was a good breakout. Actually, yeah. I wanted to talk about the market cycle, which starts with breakout, then channel, then trading range. And this is a great example. Breakout, bar 2, 3 start the channel. Leg lower, bar 9 is a third leg, so we're in the trading range, and then the market goes sideways for half the day. Then the market cycle resets with a breakout on 49. Good rally 11, bull bar closing on its high. Bar 12, bull bar closing below its midpoint, and that's 3 bars, so now we can start to see a pullback is coming for the bulls. Then we see another bar 13. Is this too small? Bar 13. Bar 13 has a tail, so there is a pullback, but no trend line break. Oh no, my mouse is tweaking. I'm trying to draw. Bar 13, no trend line break, but there's a pullback right there, and then it rallies. What is going on? My mouse is being silly right now. Bar 14 doesn't look like a trend line break, but it's becoming an opposite bar. It has no bull body. Leg 1, pullback leg 2 into the EMA. Market goes sideways. Bulls are getting chat. Bears are getting chat. Bulls are getting chat. Market's going sideways right under the EMA. I like 21. I didn't trade today, but I thought 21 was a good short. And then bada bing, 23 happens. And when that happens, you just have to take a loss. You know, the markets are at best 60-40 for a moment here, for a moment here. So you're just going to take that loss. If you're trading small, you can have a wide stop and scale in. I don't recommend that because You have to really understand the context. If you've seen me trade, I do scale into losers, but I do it in a very seldom because you just have to understand the context. Don't scale into losers until you understand if you bought this bar and you scaled in, you're going to die. However, if you sold bar 58 and you scaled in here, that's a little different because you had a bad entry to the short side. Here, you're long going against the momentum. You're gonna die. And I've done a trade like that, and it was disgusting. I couldn't breathe. I don't remember what. I just don't remember. My life flashed before my eyes. I was long, like not on this day, but a day similar. I was long, sold off. I was like, okay, I'll get out to 50%. I bought the bar, and it came like to just kind of how this bar doesn't reach 50%. It sold off. So okay, I'll buy another couple bars lower, and it just kept going, and then I kept buying, and then that happened last year. I wish I screenshot that day. Anyways, big bar, surprise bar, 23. Good enough to get a second leg. Is it though? Because the third leg, 24, follow through, and then we start to see a slow, gradual sell-off. 25, tail, 26. So 25 has a tail. That's what I meant. It's a weak bear bar. 26, bear bar closing slow. 27, bear bar closing slow. 28, bear bar closing on slow. 29, 30. 29, bear bar closing slow. 30, bear bar closing around the midpoint. And then we start to see that pullback. I'm really interested in the way you guys trade. I can start to curtail these a little bit. I'm going to always focus on micro channels. I'm a wholehearted full sender when it comes to micro channels. If you want to become profitable, 3 bars and a pullback's the quickest way. You look for reversals and you're playing a tough game. So you could short any of these bars for a scalp, or you could wait for that pullback. The market goes sideways, so 31 is that shallow pullback. So you could short that bar. Someone told me that these reviews sometimes are a little bit. I just recommended people short a bull bar, and you have to understand the context to short a bull bar. If you're not comfortable shorting a bull bar, wait for the low close 37. This is a low too. Yeah, you sit through some drawdown, but you would make money around here. This 48, 49 was a leg 2 of this move, but it was such a strong leg 2 breaking out of the range. reset the market cycle. It reset the market cycle. So we see 37, big bear bar closing low, immediate pullback. We're trading at the trading range lows. It's a tough short. So, but you were playing for the breakout. You put your stop 1 or 2 ticks above 38. Before this, I used to have very wide stops and I'd manually hit out. But over time, it's just easier for me if the market takes me out. So I use tighter stops now. So that's something. If you have a hard time hitting out, and if you trade breakouts, your premise will always be wrong 1 tick beyond the breakout bar. It's just that simple. You don't have anything. Sure. There was a trade. Okay, let's get through this and I'll tell you guys. Well, I'll jump back to that. If you're trading breakouts, your premise is wrong, but 1 tick below the breakout bar, and that's just it. If you're if you're an experienced trader, you could do 2R and have an order sitting at the 50% level and then scalp out here because okay, you see this bar right here. Let's say you short 22 and your stop is right here. What you could do, this is a bad example because you get stopped out again. It's a small bar, so let's just pretend you don't get stopped out. So you short here and the market rallies against you. You put another limit order here because there's trapped traders now. Bears are now trapped on 22, so the market will return and you can get out there. But please don't do that unless you are willing to back test it extensively. I don't know how to say that dang word, rigorously. So yeah, sideways into the market, sideways into the EMA, excuse me. 45, 46, bear bar, bull bar closing on its high. 47, bear bar closing on its low. 48, bull bar closing on its high. Hard. That makes it hard. It's back and forth, tight trading range since bar 30. About an hour and a half. TTR, but the momentum. Remember the gunshot analogy? Haven't brought it up in a while. You should have bullet into a box. If it's under 20 bars, generally the momentum is going to stay the same. So this is under 20 bars. It's about 15. Now, this is my my setting right here. Good breakout 49 produces the gap with 50. Good follow through 51. Another bear bar closing on its low 52. Good follow through 53. And now we have about 9 bars in a row. We have 5 bars in a row. That's 5 bars. That makes sense. 1, 2, 3, 4, 5, 6 bars in a row. That pullback's coming. 54, big bear bar closing on its low. I feel like I'm jumping around today, but I want to say something about this breakout. Leg 1, tail on 50 makes leg 2. What the heck? Leg 1, pullback. Leg 2, tail on 53, pullback. Leg 3. So now we have 3 legs down on a fractal time frame. So on the 1 minute time frame, there's 3 legs down. So we know that pullback's coming. That's why the probabilities for a pullback increase after 3 bars, because that's 3 legs down on a fractal level. See? Pullback leg 1, pullback leg 2, pullback leg 3-ish. So, and then that pullback came, because now on the smaller time frames where the market cycle is going sideways. And what is a pullback? It's sideways price action. So here, 55, bull bar closing on its high. Good follow through 56 and 7. 3 bars in a row, strong to get its own second leg, and it does with bar 59. Bar 60. I like that trade too. That's a small trade for the big leg too with momentum. The gap is staying open under the EMA. Here another 61 bear bar closing on its low. Again, another gap is now made with 63 bear bar closing on its low. Follow through, and now the market cycle reset on a smaller time frame, so that's a trading range, and it breaks out and gets to its 1-to-1. So we have 3 legs here, pullback, leg 1, pullback, leg 2, pullback, leg 3. Then we have leg 1, pullback, leg 2, pullback, leg 3. Market cycle resets, smaller time frame. So we reset on the breakout, leg 1, pullback, leg 2, rallies, leg 3. So I really, really, really urge everyone to learn the market cycle, because even if you don't place trades, if this is not if you're looking, whatever you want to do, it will always revolve around the market cycle. So that breaking out below this trading range, which is the second leg for this leg, follow through 63, follow through 62, 64, and then we break out another 4 bear bars in a row. That's about 1, 2, 3, 4, 5, 6, 7, 8, 9 bear bars in a row. Shallow pullback 69, but you have to ask yourself late in the day, two visible legs lower. It's good for a short, but you're gonna have to scalp out. There's gonna be buyers below 69, and there was end of the day with a rally. That's that tail I was talking about on the daily chart. I said there's a tail here, so the afternoons the Asian session is selling, and that's what we see right here. I wanted to say something that I can't remember, so yep. There's bulls get a gap. Bulls get a breakout gap above the EMA, and yeah, you know, gaps trap traders. All right, guys, pulling up on that 15 minutes. Let me just do some quick measured moves. Oh man, I feel like I was kind of rambling today, guys. Let me know if how you guys felt about this breakdown. The breakdowns are hard because the channel is growing and everyone's at a different spot. So if you guys have made it this far, you know I like to make these very similar. I trade the market cycle and I trade the first part of the market cycle and the second part, which is breakouts and channels. This leg got 1-to-1 right here. Market cycle reset, so 1-to-1 of this trading range that was met with 54. Also another reason for the market to pull back. Here, breakout 1-to-1's met, and many reasons why they started to pull back after 54. Again, you guys saw this measured move here. And then actually, let's see if this whole leg got 1-to-1. That to me, that's the trade of the day. It didn't. Yeah, the market was extended. The range is starting to shrink. Let me delete that. Obviously, that doesn't get 1-to-1, but it's good for a scalp. And then bulls get the breakout, and that's the bull spike starts at the low of 72, and that gets 1-to-1, and then the market pulls back. So these things start to have a lot of confluence. They start to add up. Guys, if you have any questions, please don't hesitate to ask. I'm going to drop the link in the Discord because I want you guys to ask me questions. I really appreciate it. Thank you guys. I appreciate you guys. If you learned something, share the show. Don't be a hoe, and I will talk to you guys tomorrow. It is Wednesday today. We got 2 more training days, and I'm back to training next week. I'm super excited. I took a well-needed break. I got slaughtered on that big range, big volatility. All right, guys. I'll talk to you later. Thank you for your time. As always, I appreciate you. Have a good day. No drinking and driving. Bye.